Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Friday, May the 16th, 2008. The headlines out of Switzerland this morning read, Yen rose across majors as investors reduced demand for riskier assets after a series of weak U.S. data. The yen rose across the board on Thursday as investors reduced demand for riskier assets, such as stocks, after a series of weak U.S. economic data added to the anxiety over the country's growth picture. Analysts said that while the market indicators pointed to the Federal Reserve being close to the end of its interest rate cutting cycle, there were nagging doubts on whether the economy would be able to cope without further policy easing. The dollar-yen dropped to a low of 104.43 and was last trading around 104.73 yesterday. The euro-yen fell to 161.91, while the pound-yen dropped to 203.97. The low-yielding yen tends to attract flows during periods of uncertainty, as the low interest rates reflect Japan's capital surplus. Analysts also attribute the yen's advance to a reversal of the previous session's decline and the dollar's failure to break through the 105.20 mark against the Japanese currency. The euro-dollar was down to 154.59 after hitting a session high of 155.47. According to reports by the regional Federal Reserve banks, the factory activity in the U.S. Mid-Atlantic region shrank for the sixth straight month in May, and also manufacturing in New York State declined. The U.S. interest rates futures continue to signal the expectations that the Fed would raise benchmark federal funds rates by 25 basis points by the end of the year to 2.25%. They are still pricing in a 92% chance that the central bank would leave rates steady in June. Yesterday, the euro had some support as data showed strong first quarter growth in France and Germany. But the market's enthusiasm was dampened by European Central Bank's chief Jean-Claude Trichet, warning that the pace might not be as flattering in months ahead. The ECB's refinancing rate is at 4%, and the interest rate differential between the Eurozone and the U.S. has been the main driver behind the dollar's decline. In the Asian session, markets were back to trends set a few weeks ago. The euro strengthened, the pound remained under pressure, the dollar dwindled, and in Asia, the kiwi faltered. The New Zealand dollar's drop was caused by poor data of their retail sales. It clearly shows that the state of the economy is worsening month by month, which implies that the Reserve Bank of New Zealand will cut rates. Currently, they stand at 8.25%. Many analysts are predicting that this figure could fall to 6.75% by year's end. The housing market and the consumer spending are both showing signs of deterioration, and this is prompting financial operators to remain bearish vis-a-vis the kiwi for the long run. The dollar also had to grapple with opaque data. Industrial production showed signs of lagging. The Fed still has to set a clear path as to what it feels will be the priority in the coming months, whether to suppress inflationary swelling in the economy or to revamp the economy that keeps prompting toxic signs of deterioration. This is also facing the European Central Bank. The euro advanced over the day precisely because inflationary signs seem to be gaining the upper hand in the Eurozone. There were some worrying signs of slowdown, as shown by the Economic Sentiment Index, which has pushed Jean-Claude Trichet to underline that the growth might not be as flourishing as some are picturing it to be. The overall performance of both the dollar and the euro, whose inverted correlation had been the principal traction of the market, should be reviewed not by their respective bankers, but by investors, appraising the technical level reached now by both currencies. This will have to be done in the wake of swinging prices of commodities, whose prices are more determined by fundamental news. The clash of perspectives will be an interesting conclusion to follow in the weeks to come. This concludes our news for today and for the week. We hope you've had a great trading week and that our newscast has helped you in some way in your trading. And we also thank you very much for viewing. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find a link to our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. There's also a link to our Yahoo forum, which is also called Succeed in Forex. We hope you'll be able to join us for our next news broadcast on Monday. Until then, have a great weekend and happy pipping.